Okay, hello everyone, and welcome to this webinar brought to you by City Index. This is Trend Lines and Trend Channels, and this is just part of our ongoing Wednesday webinar series regarding different educational tools and techniques that you could use for your trading. Now, my name is James Chen. I'm the Chief Technical Strategist with City Index Group. Today, again, I'm going to be talking about trend lines and trend channels from a technical educational perspective. But I'm also going to be talking about a lot about what's going on today and recently in the global markets. And needless to say, there's been a lot going on. So I'm going to try to get to that after we talk a little bit about trading with the trend lines and the trend channels. So let's get started real quick. If you have any questions during the course of this webinar, please feel free to type them into the questions window, and I will be more than happy to try to get to as many questions that I can. With that, let's get started real quick. Okay, before we get started, just a quick disclaimer, risk warning. Financial trading carries a high level of risk to your capital with the possibility of losing more than your initial investment and may not be suitable for all investors. Ensure that you fully understand the risks involved and seek investment advice if necessary. I'm just going to leave that up for a few seconds and then we can move forward. Okay, and again, just about quickly about me. My name again is James Chen. I'm the Chief Technical Strategist at City Index Group, which means what I do on a daily basis is that I trade the markets, I analyze the markets, and I educate, much like I'm doing right now. If you want to take a look at any analysis that we have, our group has, you could go ahead and go to our website, and it's right here. If you are in the UK market, this is our main website, cityindex.co.uk, and here we have daily analysis, actually intraday analysis on all the different markets that we trade in. So you could take a look at that. Today I wrote about crude oil as well as the dollar Canada currency pair. So, and you'll be able to find a lot more information and news and analysis here on our website. Okay, so let's get started real quick. Let's move forward and just very quickly about this Wednesday webinar series. We've gone through a lot of different educational topics in the past many weeks and months. And any of these webinars that you see up here, the ones that are grayed out, you'll be able to find out, find them recorded, the recorded version on our website at, again, cityindex.co.uk. And you could go ahead and view any webinars, including the one today. So this will be recorded and will be posted tomorrow for your viewing at a different time, or if you're not able to make it today. So that is trend lines and trend channels we're doing today once again. And in the past we've done many different topics. And going forward, we have many other different topics, including 2 weeks from now, trading divergences. That is price oscillator divergences. And then 2 weeks from then, we're going to be talking about trading with moving averages, and going forward, scaling in and out of trades. And then we're going to have more topics as we move forward through the weeks. So again, this is an ongoing Wednesday webinar series brought to you by City Index. Okay, so that is these webinars. And we also run webinars, regarding different event-driven topics, including, for example, the non-farm payrolls. I believe we're going to be having with Ken Odeluga, we're going to be having another webinar tomorrow, I believe, with regard to some U.S. shares and stocks and a preview of their earnings seasons or earnings reports. Okay, so be sure to tune into that. Okay, so let's move forward real quick. Let's talk about trading trend lines and channels, and and then I'm going to be showing you my charts as well, just to illustrate some of the topics that I'm talking about today. But I'm also going to be showing you my current charts with regard to all the things that are going on in the markets on a recent recently, as well as today. There was lots going on there as well. So we're going to be talking about all of that later on in this webinar. But for now, let's talk about trading trend lines and channels, the topic of this educational webinar. So basically, what I did here was I just made what's called a brain dump onto this page, and providing you with everything a lot of what I do or what I think about when I'm trading any market, whether it be FX or indices or individual shares or stocks or commodities. This is basically what I think about when I'm trading those markets, and and a lot of times I'm using trend lines and channels. Actually, most of the time you'll be able to see on all of my charts, if you take a look at my analysis, as well as in my trading, you'll be able to see that I do a lot of trend line work and channel work. So we'll see those in a second. But basically, in terms of the characteristics of trading trend lines and channels, what are trend lines and channels? They're basically artificial markers that help frame price action and define market trends. Now, what do I mean by artificial markers? What I mean is that these lines should not exist. Basically, we're just looking at the price action on each chart, and price is the most important part of each chart. That being said, we could draw in these lines. Okay, so these are man-made lines. We could draw these lines that can be very helpful in identifying potential trading opportunities with or even against the underlying trend. So while it is based upon, these lines are drawn by us, by traders, by analysts. They help frame what's going on. Okay, so they help frame price action, and they help show what the underlying trend is, where support and resistance might be, where potential trading opportunities might be, etc. So all of that can be shown using trend lines in conjunction with other tools that you have. So you may remember my talking in the past many weeks and months about confluence. So not only am I using trend lines and channels, this is just the topic of today's webinar. I'm using trend lines and channels in conjunction with my other tools, which include horizontal support and resistance lines, the moving averages, as well as oscillators, chart patterns. All of that I'm trying to put together to find the highest probability, the best trade that I could possibly find. And of course, I'm also putting that together with the fundamentals of each market. And the fundamentals will differ for each market. So for example, what moves the euro will not necessarily move the Canadian dollar, as we've seen. Also, what moves the FTSE will not necessarily move the DAX or the S&P 500 or oil or what have you. Okay, so all of these have different fundamentals that all should be taken into consideration. But when you're trading on a day-to-day basis, what I like to do, once again, is to use that framework of the fundamentals, but then use my tools, including the trend lines and channels and my other tools, to help find the best trading opportunities that I could find. Okay, so drawing trend lines and channels is far from an exact science, as you have probably noticed if you've been trading for any length of time. If you take a look at any trend line or trend channel, sometimes you get really good ones, but other times you can't. I mean, there's no way you could even draw a trend line or a trend channel, and then other times you could draw it pretty approximately. But it's not an exact science, so you're not going to find precise bounces off of the trend lines. Sometimes you can, but more often than not, you cannot. That being said, these tools can help you increase your probabilities of making good trades, and I'm going to show you that in a minute. Now, trading with trend lines and channels also provides clear risk management placement. So if you're trading with the trend, for example, if you're trading up in an uptrend, and you have, let's take a look at, I've taken the liberty here of just drawing, a few channels on this chart right here. If you take a look at any of these charts and, you have entry levels, if you have entry levels, like for example, if you're trading long within this channel right here, if you have entry levels, your stop loss placement is also pretty straightforward, okay? Although again, it's not an exact science, it's pretty straightforward, because if you're getting in on if you're getting in long within this channel, and you get in long, let's say over here on this move to the upside, okay, if you could see my mouse pointer here, then you have a very straightforward place as to where to put your stop loss or your risk management, and that's simply underneath the low of that turn. Okay, so underneath the low of the trend line. Now, again, it's not an exact science, so there can be fake outs where your stop loss is being taken out. That being said, though, you have a good area as to where you think you may be able to place a good stop loss, okay, or a good risk management where the market is telling you you're wrong if you're taken out, okay. So, for example, here, if you got in long here on the bottom of this channel right here, okay, and then you place your stop loss underneath the low of that pullback, okay, you would be taken out over here after a slight move to the upside. You would be taken out, and that's at a pretty small loss there, depending on the time frame you're using. Okay, so again, using trend lines and channels provides clear risk management placement when you're making your trades. Now, buying with an uptrend line. Buying with an uptrend line or channel is following the principle of buying on dips. Let me just address this question here from Paul. How are you doing, Paul? Paul says, James, we be having a webinar on trading strategies. I know you did one time frame one, but will you be showing difference? Yes, absolutely. I'm showing ongoing trading strategies. If you talk about trading trend lines and channels, you could say it's an approach. You could say it's a trading strategy. It's really that's all semantics there. What you want to call it. I would generally approach trading trend lines and channels when used in conjunction with other tools, which I'm going to show you in a minute, as one type of trading strategy. Yes, several weeks ago I did talk about multiple time frame trading strategy, which is a precise, pretty mechanical trading strategy, and I'm going to continue to show those going forward. What I'm showing today is a trading strategy, but it's more of a discretionary type of trading strategy, less like the multiple time frame trading strategy, which is very mechanical. But I will continue to show both types of strategies as we go forward. Okay, so great question there, Paul. Okay, so what I was talking about before was buying with an uptrend line or channel is following the principle of buying on dips. If you take a look at this uptrend channel right here, what am I talking about when I'm buying at the low? When it after it reaches and bounces off the trend line, I'm talking about buying on dips. What am I talking about in a downtrend channel or a downtrend line when we have rallies up to the upper the resistance line, the resistance trend line, downtrend line, then I'm talking about selling on the rallies, and that to me makes the most sense. I'm going to show you again, as I've showed you many weeks in the past, my principle of TPB or trend pullback, breakout, and that's basically what I'm talking about here. So when you're talking about any trend line or channel, you're talking about buying at the best or at what can be deemed the best time and the best place. So buying with an uptrend line or channel is following the principle of buying on dips. Selling or shorting with a downtrend line or channel is following the principle of selling on rallies, and this to me makes the most sense. Okay. Trading a trend line break is counter trend trading and can often be tricky. What do I mean by a trend line break? A trend line break is simply like this. Okay, it's simply like this. Okay, so we have a trend line here, and then we have a trend line break. Okay, and that's a counter trend trade, obviously, because it's a beginning of possibly a correction or pullback, or it's just a reversal or what have you. Okay, so you could play those as counter trend trades. Now, before I get to that, let me just say very quickly that obviously, as you can see, sometimes you have non-trending situations or volatility where price action goes up and down, and there's lots of noise in the market where it's very difficult to draw any type of trend line. And this is part of trading. Okay, so sometimes you could draw trend lines, other times you cannot. This happens to be an hourly chart of pound dollar. But, so when you can find a trend line, those are often the best ways to trade with the prevailing trend, okay? And some people ask me also, you show a lot of daily charts, you show a lot of, hourly charts. What if I'm a really short-term trader? Well, these trends occur on all the different time frames. Okay, so I did do the hourly chart here because a lot of people I know are shorter term traders, and I showed way too many daily charts. But you know, if you're an even shorter term trader than the hourly chart, that's fine too. You can find these types of trends that work out very well, but you know, you're not going to find them all the time, as we can see here. Okay. There are many times many trends, but oftentimes you cannot find them. But when you can find them, and you're sure, almost sure to find them on any given market if you're trading enough or you're looking at enough markets, um, and you're looking at enough good potential opportunities, you'll be able to find these opportunities. Mark asks, James, when does a trend channel get defined and how far forward to project it? 3 to 4 cycles within the channel before breakdown. Great question, Mark. That's a really good question, and I did not, I failed to put this here on this page here. What defines a trend line? What defines a trend channel? Well, very simply, from the most basic level, what defines a trend line is simply 2 touches. Okay, so if you have 2 touches, you could draw a line. Okay, so for here, for example, you got 2 touches, you could draw a line. Over here, you've got 2 touches, you could draw a line. Of course, you know, if you see here, what is a touch? What constitutes a touch? Okay, so here you could draw a line, let's say from here to here. That's a touch as well. Well, this obviously, you know, does not play out. So you know, there's not, what you want to look for is the basic, at least 2 touches, but then you want to look for the 3rd touch. If the 3rd touch is valid, then that could be the first potential opportunity. Okay, so for something like this, yeah, I mean, you could argue that you have 2 touches here. Should this be a trend line? Yes, it could be the beginnings of a trend line, but it turns out not to be. Okay. But great question there. And then how far forward to project it? Well, you know, I would just project, you know, very simply speaking, I would just project a trend line. I don't project trend lines. I would only, you know, say a trend line is valid only until it gets broken. Okay. Once it gets broken, then it's not a trend line anymore, or it's an invalidated trend line, and then I would cease to use that trend line. So I wouldn't actually project it because projecting is maybe too much anticipation. And as many of you know, and I've spoken about this on many different occasions, that trying to anticipate a market is very difficult. Rather, I would like, you know, I would want to react to the markets. Okay, so if I have a trend line, and only if it bounces from that trend line, it gives me some indication that this bounce is occurring, then and only then will I consider taking that trade. And once I take that trade, it could still go against me. Of course, I know this. Okay, it could still go against me, and at that point, I have my risk management to take care of me. So I'm not going to be anticipating that a bounce will occur, you know, 24 hours down the road, or you know, a week down the road, another bounce will occur. I cannot project that. I have no idea what's going to happen within the fundamentals that's going to change the framework of the trend that I'm trading. Okay, so it could be anything that changes that trend, so I'm not going to project it. I'm not going to anticipate. I'm only going to react to what I see. And what I see here, what I see here, what I see here are potential bounces off the trend line and a potential for a long, you know, a long trade. Okay, if it broke down, then I'm not going to be looking for that that type of a trade. Okay, hopefully that makes sense. Okay, another great question by Tibor. I'm not sure if I pronounce your name correctly, but Tibor, the SMA is also supporting, well, the trend line. Absolutely. Okay, this is a really good point here, and this is something I wanted to show you. And I did manage to write this on the slideshow. But if you take a look here, this 50-day moving average is following price action very well, and this tends to happen very much on the what do you call it, the pound dollar. So here we have this downtrend here. You know, again, resistance, not only at that downtrend resistance line that I drew in, but also at the 50-day moving average. So very good observation there. Okay, it happens time and time again if you take a look here. Okay, so let's get back to the slides real quick. Okay, so again, trading a trend line break is counter trend trading and can often be tricky. So you may ask me, what's so tricky about this? Okay, you see that that trend line breakdown, and why not trade that? Well, I mean, if you were able to get that, that is a good trade. It is a good counter trend trade. However, what I prefer to do is I prefer to look at what the prevailing trend is right now and then trade with that prevailing trend. If you are a counter trend trader and you're looking to trade breakdowns of trend lines or breakouts to the upside like this, of downtrend lines, then that's also a very valid way to trade. I'm just saying that oftentimes, or most of the time, what I do is I like to stick with the trend. But if it does break down, oftentimes you do get good opportunities, but sometimes they could, or very often they could also be fake or false breakouts. Maher, with some trend channels, there's a lot of action around middle of the channel. Is this something you would use or useful at all? There's a lot of action around the middle of the channel. Oh, okay. I think I know what you're saying. So if you're talking about in the middle of the channel, there's a lot of movement in the middle of the channel. Generally I don't like to do that just because I don't. If price action is in the middle of the channel, I don't have a lot of probability or edge on my side, or at least I don't think I do. So I like to keep the probabilities on my side. Therefore, I like to trade near support or near resistance. If it's sort of in the middle, for me, it's not enough of in terms of risk reward, it's not enough. It's not compelling enough for me to take that type of trade. But good point there. Oftentimes you will see lots of activity in the middle of the channel, but for me, I like to save my trades for what I deem as better trades. Okay, better probability trades. You could very well profit from trading in the middle of a trend, but for me, it's not enough of a compelling argument for me to do so. Okay. Let's see. And also trading back to a trend is also counter trend trading and can also be tricky. Okay, so some of you may say, what's so tricky about this? About trading short at the top of an uptrend channel? Well, here it worked out just fine. But for me, again, I like to play with what I see as, how I view the market, which is basically you've got a trend, you've got pullbacks that are based on profit taking or just short-term consolidations within the trends, and then continuations of the trends or a breakout, below the trend or what have you. But in terms of trading back from the top of a channel, it's done a lot. Many people do it, but I just don't happen to be one of those people. Okay, so I don't like to do that just because I like to trade the momentum of the current market as I see it, and I'm reacting to the current market. Okay. Okay, good. Let's move on. Okay, so trading back to a trend is also counter trend trading and can also be tricky, but it can be done. Okay, so this is another way to trade, trend lines and trend channels is trading trend line breaks or trading back to a trend, back to a trend line after it's, if after it's moved away from that trend line. Okay, hopefully that makes sense. Now, when trading with a trend and within a trend channel, this is something that I do sometimes do. The other side of the channel can be used as a place to take profits, but be conservative in doing so. So what does that mean? Okay, so basically, when trading with, let me read this again. When trading with the trend and within a trend channel, the other side of the channel can be used as a place to take profits, but be conservative in doing so. Okay, so what do I mean by this? Okay, let's do a downtrend. Here, let's say you've got a downtrend, okay, which you do. And here, let's say you've got this, you go short, on a breakdown below this this thing right here, okay, this short-term uptrend, this intra-channel uptrend line, okay, if you want to be confused even more. But this is an intra-channel uptrend line. So if you have a breakdown below there, let's say you take that as a signal to go short. Let's say you go short there. and you have your stop loss above. Okay, you go short there, and then you're targeting the lower end of the channel. That could be fine, but the lower end of the channel is constantly, this is a dynamic support line. So, the lower the end of the channel is constantly moving lower. So what I mean by, using the other side of the channel as your profit target, you could use the other side of the channel, which is this line right here, as the profit target, but keep in mind that this profit target is a moving target. So it'll keep moving down as the trade develops. Okay. So, and it also may never meet this this um, lower end of the channel. So when I say be conservative, what I mean is that don't make your profit target all the way down at the lower end of the of this uh, of this channel. Rather, make it short of that. Okay. But an even better way to do it would be to actually move your stop loss. Okay, so you could lock in your profits, and that's generally what I like to do. I like to move my stop loss. Once the trade goes in my favor, I like to move my stop loss in the direction of the trade, and then try and lock in as much profit as I can before I get taken out, and then hopefully I end the trade at a nice profit. Okay, at a good risk-reward ratio. Aaron, where the trend lines touch the candlesticks, does it matter which part of the candlestick it touches? E.g., does it matter if it's the high, open, or body of the candlestick? Thanks. That's a great question as well. Okay, so what do you mean by this? Do you mean am I connecting the lows, or am I connecting the lows of the bodies? Or what am I connecting? Well, generally speaking, what I said before really holds true with this question here. Uh, drawing trend lines is not an exact science. It sometimes can be, but generally speaking, it's not. So what I like to do is I start off by connecting the lows. That means the low of the wicks. Okay, but as the trend develops, and if I see that give or take something, this is moving within this trend, then that's what I'm going to use. So for here, if you take a look, this is far from precise. Okay, am I using the bottoms of the bodies, or am I using the bottoms of the wicks? Well, pretty much neither. I'm going back and forth, but this frames the trend very well. Okay, so it is showing support here very well. Plus, it's going along with this 50-day moving average very well. So again, it's not an exact science, but connecting the lows, and of course, like I mentioned, I will first connect the wicks rather than the bodies. Okay, just to see, generally speaking, I do that. Okay, so here, I may have misdrawn this a little bit. Okay, so generally speaking, I'll try to connect the wicks, so the highs of these wicks, and then and that should frame the the trend pretty well. Okay, great question there. Okay, so yeah, you could when trading with a trend and within a trend channel, you could use the other side of the channel to be used to take profits, but be conservative in doing so. And then the question that the comment that Tibor made here, the SMA is also supporting well the trend line. Here, I've added that in here. Trend lines can be reinforced by moving averages and oscillators. So this is very important here. Now this is a very, very important technical observation here, that this moving average tends to follow support and resistance very well, very, very well. So if you take a look here, we've got this following resistance here, and then when we got a breakout above that, then we have this sort of acting as support, and then we break down below there, and then nothing really happened here, but then break out to the upside, and then sort of support here as well. Okay, so oftentimes, especially during trends, okay, we'll have the 50-day moving average acting as support or resistance and helping the trade along. Now, what do I mean by oscillators? So here I said trend lines can be reinforced by moving averages and oscillators. Now here, if you're looking for a trading strategy, this this is a discretionary type of trading strategy, but if you're looking for some type of trading strategy that you could observe first and test, then this could be one of them. So if you're looking to draw trend lines and or trend channels, we could very well do without this. Okay, we don't need this. We could just use this trend line here. A trend line is simply in a downtrend, it's connecting the highs. In an uptrend, it's connecting the lows. So we really don't need this here, either, okay? So we could get rid of that. But I just put that there to show a trend channel. But here, we're looking at the trend lines. Now, once you do this, what you could also do here is that you can use in conjunction with your trend line and your moving averages, you can use oscillators, much like what I have down here. And this is Stochastics 1433. Very simple oscillator. All it does is it's an indicator that's bounded between bounded between two values. In the case of the stochastics, it's between 100 and 0. Now, what does this tell you? Well, it tells you, it gives you some indication. Of course, this lags price, so it's just an adjunct type of tool to use with your trading. But when you use in conjunction with your trading, it's showing you that there are areas where there's that the oscillator goes in oversold. Okay, and if you're trading with a trend, then this is exactly what you're looking for right here. Okay, right here. Okay, do you see that? Okay, so when it's oversold, then it crosses, this may be a little faint here, but I've got the 20 line is oversold, I've got the 80 line is overbought. Now what is this telling you? This is telling you that it's crossing above oversold at the same time that it bounces off this trend line, at the same time that it bounces off this moving average, and therefore, to me, that technically looks like a good opportunity. Now, if you want to play this in terms of the entry, how do you enter? Just like I just showed you, you could do something like this, okay? Or if you weren't able to get in and you play a breakout of that, or if you weren't able to get in there, let's say you traded this breakout right here. But I prefer not to do this because I don't like trading new highs. Okay, I don't like trading breakouts and new highs. I like to look at pullbacks before that breakout. So, for example, let me show you on okay. I already have them drawn here. Okay, so if you take a look here, let's say right here, okay, on the third touch of this line. So it touched this downtrend resistance line. Okay, it also follows the 50-day moving average. It also, as we see here, a cross down of the stochastics below overbought. Okay, and then you draw this. Okay, and then you play that breakdown. Okay, that's a possible trading opportunity and trading setup there, and it uses my my principles of confluence, which if you're not familiar with what that is again, it's putting together different aspects of your technical trading as well as your fundamental trading and looking at that. So again, we got different factors here. We've got this trend line, okay, acting as resistance. We've got this 50-day moving average. 50 period moving average acting as resistance. We have this cross down on the stochastics acting as a momentum to the downside, okay? And then we have this cross of this counter trend support line as my trigger to get into the trade, okay? Alex, in a downtrend, if the trend line is is broken out, but the price stops in a confluence of Fibonacci resistance candlesticks, take this trend. Okay, again, in the downtrend, if the trend line is broken, but the price stops in a confluence of Fibonacci resistance candlesticks, take this trend. Well, it really would depend on the situation. I like to look for everything pointing in my direction. Okay, but if you find that shortly after a trend line breaks, and then you find a confluence that's going against your trade, then you may decide either to close that trade or what have you. But for me, I'm looking for trades that go in my favor or I mean, I'm sorry, the confluence to go in my favor. If the confluence does not go in my favor, then I'm probably not going to take the trade. Now, if I take the trade and then I see a confluence going against me, then I'm going to keep my stop loss where it is, and then I'll play the trade out. I'll play the trade out. If it goes in my direction, I'll move my stop loss in the direction of the trade. Remember that, in the direction of the trade, not away from the trade. Okay, you're not trying to go for a larger loss. You're trying to cut your losses and move the stop loss in the direction of the trade if the trade goes in your direction, and then you're trying to lock in profits from there. Okay. So again, trend lines can be reinforced by moving averages and oscillators. Okay, so I put this afterwards. I don't know why I did this, but I think some of you have seen this before. What is an uptrend? It's connecting the lows. What is a downtrend? It's connecting the highs. Okay, that's all it is. These are real charts here. These are real charts, but they happen to be pretty perfect charts, and that's why I chose to take a screenshot and put them on my PowerPoint slides, because this shows the perfect world, the ideal world of uptrend and downtrend lines, but you're not often going to see this. Again, it's not an exact science, but it can be extremely useful in finding trading opportunities and also in framing the trend. So again, uptrend is supporting the lows, downtrend has resistance at the highs. Okay, and that question before regarding am I connecting the wicks or the highs and lows or just the bodies of the candlesticks? Here, I think you could see that my preference is to connect the wicks. Okay, but that could trading is dynamic. Markets are dynamic. Markets change. So okay, so just as an aside, a lot of people say, you just changed your trend line. Isn't that cheating? Of course it's not cheating. I'm not trying to look good. I'm trying to make money off of my trades. So the fact that the market changes and perhaps a trend line shifts does not mean I'm cheating. It means that I am trying to adjust the trend line to the current market, and if it cannot adjust, then I'm just going to get rid of that trend line and then invalidate that trend line. But if it can be adjusted, then I will do so, because it still could offer me opportunities to make money in the markets. Okay, so the fact that I'm connecting all these highs here and then all these lows here, and then the market shifts a little bit, and then maybe it accelerates, and let's say for this uptrend line, it accelerates and goes faster, and then I could shift my trend line accordingly. If it does like a little false breakout, I could also shift my line accordingly. If I can't shift my line and it doesn't look convincing, it doesn't look like true support or resistance, then I'm simply going to invalidate the line by getting rid of it. Okay. Okay, so the point of all this trend lines and stuff is that what are we doing in the end? We're trading pullbacks. Okay, this is if you're not trading breaks of trend lines, but if you're trading within trend lines and channels, then you're trading pullbacks, and every market will have pullbacks time and again. And that, I think, although the markets always change, the one constant you will always have is that there will be trends and there will be pullbacks within those trends. And what I try to do is take advantage of those pullbacks within those trends. And that can be done very readily using trend lines and trend channels. So, okay, trend channels real quick. Here is trend channels are ideal representations of trends. Okay, so in an uptrend, we have higher highs and higher lows. And in a downtrend, we have lower lows and lower highs. And, in the world of technical analysis, those are textbook descriptions of uptrends and downtrends, and what represents a textbook description of uptrends and downtrends? They are trend channels. Okay, very simply, trend channels. Because you can also have trend lines like this, for example. Let me try to find a better one. Let's try to find a better one. You could have trend lines. Yeah, I can't really seem to find one here. But okay, let's say, for example, here. This is not a really good example, but let's say you have a trend line here where you have higher highs, higher lows. Higher lows defines a trend at its most basic, but sometimes you don't have higher highs. Okay, so you have a high here, and then you go back to the trend line, and then you have a lower high here. Okay, and then you go back to the trend line. So this is an uptrend, yes, but it can't be defined as an ideal uptrend because it doesn't have higher highs as well. Okay, so that wasn't a great example, but what I'm trying to say here is that trend channels are the ideal representations of trends. If you cannot draw a trend channel, just don't, because it's not that often that you're going to find a very good trend channel. Okay, the trend lines all over the place, but trend channels not that often. Okay, because they are ideal representations of trends. So trend channels can be traded within or traded on a breakout. So what do I mean by that? You could trade within the trend channel or you could trade on a breakout. And what is a trend channel breakout? You could call it a flag pattern break, okay, or what have you. And I'm going to show you this in a second if time permits. Okay, I'll try to get to the questions as I can, but basically, when I say this, trend channels are akin to flag pattern trading. Let's take a look at this. Okay, so this is the euro dollar, by the way, which by the way, I am bearish on. But here, for example, you have this little trend channel here. This is on the daily chart, but you have this little trend channel here. It's an uptrend channel. Okay, you could play within that channel on a lower time frame, not on the daily chart probably, but you could play that channel. But at the same time, on a breakdown of that channel, this is simply a flag pattern breakdown. Okay, very, very simple. Aussie dollar, even better. Okay, Aussie dollar. Here you see this trend channel. Okay, not a great one, but a trend channel nonetheless. This is an uptrend channel. Same over here. Okay, uptrend channel. But then when it breaks down, and that's what I was looking for, a breakdown below that flag, and then a break to new lows, which actually occurred just today. We had a break to a new low on the Aussie dollar, which is what I'm looking for. And incidentally, I'm looking to hit the 73 level on, my 75 level is hit. And then I'm looking for the 73 level on the next stop for Aussie dollar. Okay. Okay, great. George, DAX is on a breakout from a bearish trend channel. Yes. On a breakout from a bearish trend channel. Let me take a look at that. Let me take a look at that real quick here. Okay. DAX is very interesting. A lot of people trade the DAX. Yep, absolutely. You're absolutely right, George. This is what I talked about. It sort of slipped my mind a little bit, but here we see this very nice downtrend channel on the DAX. Okay, and I've been bearish on the DAX for quite some time. But then here we could see all these gaps, due to what's going on or what was or still going on with Greece, and also the China equity markets. But anyway, we had a very nice downtrend channel here, a very very nice one there, and then it just broke to the upside just recently. So basically on the after the Greek proposals were put out, and although that's still an ongoing situation. But after that occurred, we saw a big move to the upside on the German DAX. So yeah, we have a breakout there. But for quite some time, we had a very nice downtrend channel. Okay. Okay, ranges. Okay, so ranges are basically channels, but they're going sideways. And these you'll find very often. You find it on oil. Okay, well, not right now, but you find, oil is dropping like crazy. But anyway, here you find this on oil, this range here, which can be deemed a trend channel. It's just a sideways trend channel. It's non-trending. Okay, for quite some time, since beginning of May till the breakdown that just occurred in the beginning of this month, in the beginning of June. I'm sorry, July. So here we have this big sideways trend channel. How could you play this? Probably not on the daily chart, but you could play this by looking for the turns within that range. Okay, and then using the same technique that I just showed you with the trend channels. Okay, which is drawing intra-channel trend lines. Okay, so here are intra-channel trend lines. They could be going to the upside or to the downside, and you could play breaks of those within the ranges, and that's one way that you could play these types of moves. So again, on the crude oil chart, on a lower time frame, a possibility existed for you to do this, and that could have been a possibility. Okay, playing breaks of the intra-channel trend lines. Of course, we got this breakdown. This is U.S. crude oil. This is WTI, or West Texas Intermediate. But the chart looks similar on Brent, which is the UK benchmark. But anyway, so we got this breakdown here, and then now we're sort of in a flag pattern. Interestingly enough, if you read my article today on crude, we saw a move to the upside after the Iran deal was agreed upon yesterday. We saw a move up in oil, which was counterintuitive. But then now we're seeing a move back down to the downside. But people are saying that Iranian oil, if you're interested, Iranian oil should take some time before it ramps up and starts really flooding the global market. Also, this Iran deal was already priced into this market. That's why there was a move to the upside yesterday. But now we're seeing a move back to the downside, and and this is forming sort of a flag pattern here, a bearish flag pattern at that. Okay. Okay, and I think all of you have seen this before, TPB, trend pullback breakout. This is basically trend trading. If you look at this trend line right here, this is a trend line, okay? This is a pullback, and then it pulls back to the line, and then you have a counter trend resistance line here. If this was a trend channel, then it would be an intra-channel trend line, okay? And I think I've managed to confuse some of you with all of these terms here, but basically what it is just a trend line that goes against the overall trend. So there you could play a break of that, and you could put that in conjunction with your oscillators, and that is one typical strategy that I'll often use, discretionary strategy that I'll often use. Okay. So what am I looking at? We got a few more minutes. And I just want to get to Tibor. If the price moves out suddenly from the trend channel, it could mean that the trend is going to exhaust or weaken. Yes, it could. It could very well mean that. In the uptrend example, so if the price moves out suddenly from the trend channel, so moves to the upside, it could mean that trend is going to exhaust or weaken. Yes, it could mean that. But will I trade the counter trend? Will I trade the pullback from there? Probably not. Okay, probably not. I'll probably wait for it to come back down, and then possibly, if it doesn't completely collapse, look for, within the if it's still an uptrend, to look for opportunities to buy there. Okay, let me see. What was it? Okay, so let me quickly go over what I'm looking at very quickly. Okay, let's take a look at euro dollar. Yeah, I'm bearish on euro dollar. With what's going on in Greece, it's still ongoing, okay, and the possibility for a Greek exit from the euro, the possibility is lessened now somewhat, but there's still that possibility. But generally speaking, we have a long downtrend in euro dollar, and there are lots of problems in the euro. Also, the U.S. dollar is, with this potential rate hike that was just reiterated today by Janet Yellen, Federal Reserve Chair here in the U.S., then if we see strengthening in the U.S. dollar, then we could see more weakening on euro dollar, and I'm looking towards 108 there. Okay, pound dollar, this is a toss-up. We see some strengthening here. I'm looking to the downside. Some of my colleagues are looking to the upside. Right now, it's hard to say. We've got this rebound off this 200-day moving average, but I don't see it going much past 158. I'm looking towards the downside, towards 152 once again. Dollar yen, I'm bullish on dollar yen. Okay, why? Because first of all, the dollar, because of the dollar strengthening that has been in place for quite some time. Also because of the potential rate hikes, and as well as the Japanese yen most recently strengthened because, which means the dollar yen went down because of, it's known as a safe haven currency. People like to, buy the yen when, when there's not much risk appetite, which happened, of course, with the China market almost collapsing there. So, but I think, now as things are getting a little bit there's less risk sentiment in the markets right now. I'm looking for, another recovery of dollar yen back up towards its 126 target to the upside. Aussie dollar, as I told you before, looking to the downside. I'm looking once again towards 73 for another long-term low, and then possibly down towards the 70 level. I believe in terms of Australia, the RBA, Reserve Bank of Australia, is looking for further depreciation of the Australian dollar, plus, as we mentioned, the US dollar strengthening, and I'm looking for further strengthening on that. The big news, dollar Canada. Today, what happened? Canada lowered the Bank of Canada lowered its rate to 0.5%, its interest rates, and therefore that weakened the Canadian dollar. Also, weak oil weakens the Canadian dollar. Also, as I mentioned, the U.S. dollar strengthening with the Janet Yellen. Also, the U.S. dollar strengthened from the producer price index today. Then, all these put together made that huge leap to the upside, and we see a new 6-year high on dollar Canada. I'm looking for 130, but I'm looking for a pullback at some point from this overextension to the upside. Okay, and then let me go lastly to the indices. And oil looking for further downside. As I mentioned, this looks like a bearish type of a pattern here, a bearish flag pattern. Also, there's just too much weighing on oil in terms of oversupply in the global markets. Let's see. S&P 500 is strong, surprisingly. But German DAX, I'm looking for a move back down. I don't think this breakout is really that real. So I'm looking for this breakout of this channel. I'm looking for a pullback back down towards lows. Let me take a look at the. Okay, here on the S&P 500, also looking for a pullback. I mean, we're too high here, before a possible further, up move on this uptrend. But here, as we can see, a very nice pullback to this key support line right around the 2033 level. So that was a very technical thing that just occurred. And then one more thing I wanted to show you on DAX. Here, as we can see, the DAX bounced off its 200-day moving average, so that was sort of technical too. We got a gap move to the upside, and then as we mentioned before, a breakout above both the 50-day moving average and this downtrend resistance line, but looking for further downside for a retreat or at least a pullback on the Germany 30 or the German DAX. Okay, Andrew asks, hi James, do you find that technical trading with TTP is more applicable to FX as opposed to, say, gold, oil, Apple shares, etc.? TTP. TTP, I'm not sure what that means. I probably should know what that means, but I'm not sure what TTP means. It's more applicable. Oh, TPB. Oh, okay. Oh, trend. Yeah. Trend pullback breakout. You know what? I think that trend pullback breakout is very applicable to FX, and probably more so than to the commodities. Okay, like gold and oil. But also, it can be used very well with indices. Okay, so indices and FX, the macro markets. In terms of gold and oil, they're very, very sensitive to fundamental events and conditions. Not to say that FX is not, but FX seems to me to be very, very technical the way it trades most of the time, and that's why I like to use these types of things more often with FX than others. But this principle really applies to all the markets. Okay, as long as you stay away from the really huge market moving events that occur that are scheduled. The ones that are not scheduled you can't avoid. Mike, do you have a preference for EMAs or SMAs? All of the ones that I'm using are SMAs, simple moving averages. Why do I use simple moving averages? Because a lot of people, I think, most traders or most, at least institutions, will use, for example, the 200-day moving average, and this is usually the simple moving average. And I like to use what traders, in general are using, because that gives me a view as to what other traders are seeing. Now, in terms of that, though, an EMA or exponential moving average is weighted more heavily on the more recent price action, which makes them more sensitive to moves in recent price action, which can be very good for which can be make it less of a lagging indicator. But essentially, they're all lagging indicators. So I use the simple moving averages only because they're used more often um, by larger institutional traders, and that's what I like to look at. I like to look at what everyone else is looking at. Um, I think that gives a bit of an edge there, and I'm just trying to gather as many edges as I can. Okay, looks like no other questions here. I think that was a very good session of questions. If you have any questions that I have not answered through the course of this webinar, please feel free to email me always at james.chen@cityindex.com. And again, any questions that you have, please feel free to email me. And if you have any, if you would like to join us for the next webinar, it is 2 weeks from now, on the two Wednesdays from now, and we're going to be talking about let's see. We're going to be talking about trading divergences, which is very technical, so you might like that. All right, so thank you very much, everyone, for joining me today, and I'll see you next time. Thank you.